Well, taking a look at Nvidia shares, they took a dip after reportedly delaying their new AI chip for China, despite being designed to comply with US export restrictions. Sources told Reuters that the delay was due to issues that server manufacturers were having in integrating the chip. For more on what this means for Nvidia stock, we turn to Constellation Research founder and principal analyst Wang. Ray, always good to see you. So give us your take on this situation, because we knew some companies were going to try and find a workaround for the chip restrictions put on by the Biden administration. What does this mean for Nvidia?
Yeah, I think it's important to realize it's not easy to get a chip out there. It's not easy to get a chip certified. And so what NVIDIA is trying to do with the H20 chip to get out into China, it's going to take time. And it's not going to be just them. It's going to be everyone else. But it leaves an opening for Huawei to jump into that market. And that's what investors are reacting to. But I think the flip side of this is that it's not easy getting a GPU or chip out the door. So all those people who think that NVIDIA is going to have competition right out the back, whether it's coming from AMD, whether it's coming from Microsoft in the future or Google's TPUs or anybody else, it's not that easy to get a chip out the door. So if it takes NVIDIA a little hiccup to get this out the door, it's going to be just as hard for someone to come into the market.
Nvidia, Ray, certainly one of those names that is more exposed to the Chinese market. About a fifth of their revenue comes from there. In this particular case, though, you mentioned Huawei. Do they have the tech to match what Nvidia would have offered here? I mean, these are chips that the company was building specifically for the Chinese market for the workaround, the export controls.
You're definitely right. It's not easy to do that. Does Huawei have the chips? The short answer is no at this moment. But keep in mind, like, you're taking a Rolls-Royce to solve an AI problem. Maybe they'll just use a few more Huawei chips, which would be equivalent to getting a Ford or GM chip out there. And I think that's the important thing, is like, you don't always have to use the high-end chips to get to the answer. And you might have some workarounds along the way. And I think that's what China is going to be doing, especially with the export ban and the trade wars that are continuing.
And what are we seeing in terms of demand, especially for these advanced AI chips, and whether or not NVIDIA is able to keep up with some of the demand as people essentially are still gravitating towards NVIDIA over the competitors?
They are definitely keeping up with demand, right? If you look at the revenue in the data center, right, it's up 41% from Q2, but you got to take the year view and it's up 279%, right? Data center revenue blew everyone's expectations. That's 14.51 billion. And that means every public cloud vendor is basically refreshing their data centers, making sure they have the chips that are going to solve the AI problem. And if you look deeper into the numbers, you realize the public cloud providers were half the revenue of that data center business. So definitely they're keeping up with demand, and definitely the demand is still there.
Ray, specifically on the China exposure, though, how do you think investors should be looking at this moving forward? I mean, this is just one case, but as we've seen, this is one of those companies, along with an Intel, that kind of gets wrapped up in U.S.-China geopolitical issues. So is this sort of NVIDIA sort of can increasingly make up ground in other markets? I mean, should investors be sort of betting on this revenue continuing to come through from the Chinese market when you consider where policy is headed?
You're definitely right. I think the way to look at all tech policy with China is China was on a mission to basically replace US technology. They created joint partnerships. The partnerships were really technology transfer exercises. You make a little bit money in China, but you lose the whole business and your IP in the long run. I think every tech vendor has faced that challenge. Investors should just brace for the fact that in the long run, the China business is really not a business to be in. It's a business that is an exposure risk. Once you understand that, then it's how do you make up the revenue in other areas, and you have such a lead on the technology that you're still in demand, and China can't commoditize that technology. We saw that with solar panels, we saw that with PCs, we saw it with networking gear, we're seeing it in pharmaceuticals and other areas. We just have to be careful of that from a geopolitical risk.
So then, Ray, if not China, then who would be a solid alternative, or given how far ahead China is, especially though, in terms of not just the technology, but the ability to manufacture it as well?
So I think NVIDIA has at least a 3 to 5 year lead here, and a lot of it's really in chip design. There's a lot of export controls, and it's a lot of the know-how in getting these chips to work. That's not something that's going to be easily copied, but you can slow it down. It doesn't mean you're going to, forever be able to keep China from being a competitor. That's just not a reality. The demand is really going to come with more advancements on the AI chips. With chips, it's always about being faster, cheaper, using less power. Those are the things that people are looking for. As we get to 2 nanometer technologies and even smaller, those are going to be things that you're going to see that the advancements are still on the US side, but that might be a lead for just this decade. And that's an important thing to realize. The other demand has really come from new types of chips, new types of materials and material science that's going to change the way chip design occurs in the future. And so I think that's where people have to actually focus on. But for the next, 4 to 8 quarters, I think NVIDIA is in good shape. There's still a lot of demand, a lot of AI use that's going on. And of course, the data center companies are the public cloud vendors are basically in their refresh mode.
Ray Wang with Constellation Research. Good to talk to you today. Belated Happy Thanksgiving.
Take care. You too.